Good morning, folks, and welcome to today's video. So today I have four pairs on watch, and those are pound Kiwi, dollar CAD, Aussie dollar, and dollar yen. So let's break these down for you now. We have a lot to get through today. So let's break down my favorite of the bunch. First of all, pound Kiwi. So as you know, I took a trade on this earlier in the week. If you wish to see the trade recap, I believe it was yesterday, then feel free to watch yesterday's video. So on the higher time frames, pound Kiwi, the narrative as I see it is as follows. We talked about previously in that previous video and in previous videos how this wick here just appears as a wick on all time frames. Therefore, those of us who trade this Falcon strategy usually determine that to be volatility. If we just switch to the line chart, on the daily chart, you can see that wick doesn't appear. On the 4-hour chart, I think the story is the same. Where are we? I can't remember where we are now. Yeah, it's a wick on all time frames. So therefore, that is not indicative of the sentiment of the market. So therefore, that changes the picture. That changes how I analyze the market structure. And how I analyze it is that we can see this high here. We've broken above, caught people the wrong side of the market, which is typically what we see on the higher time frames. And then we've pushed down aggressively, and we're trading well and truly below here. And not just below here, but below this high as well. Okay, below this, we're not below there, but we're certainly below this high. All the significant ones, you can see that we're kind of coming up to retest that level there if you're trading levels, but that's not what we actually trade. You can see we're moving up. You might be thinking, well, is this not a piece of structure to move to the upside like so, to push up to there? Well, it could be, but what we at first have to determine is what has it reacted from. If we just look left, okay, looking left is one of the things that many traders don't do, and that's partly because they're too zoomed in. We've not really reacted off of anything, okay? And then the next thing I ask myself is, yes, we're now trading above this high, above this low, sorry. But if I just zoom in, what those of us who trade the Falcon strategy always ask ourselves, how has price moved up? If we just analyze this structure, analyze the move up on the 4-hour chart, this is not a progressive move up. Okay, we don't normally see a move up followed by a sharp move down, sharp move up, sharp move down, sharp move up, sharp move down, etc., etc. That is a non-progressive move. Okay, suggesting exhaustion and that we may be able to capitalize on a move to the downside. Of course, previously you might be thinking, well, you know, your previous analysis didn't work and it's just gone higher. Those of us who trade the Falcon strategy are not interested in being right or wrong. What we're interested in doing is analyzing the narrative and then adjusting our sails as the wind changes direction, as it were. Okay, the wind will always change direction. No gust of wind ever, the wind doesn't blow in the same direction indefinitely. It changes direction. Okay, so if you're not moving with it and you're not moving with the sentiment of the bigger players, moving with the money flow, then you'll just be you're suffering from confirmation bias. Okay, you're just sticking to a previous, or you'll look at this and go, oh well, my previous bias didn't work, therefore I'm just not going to trade this pair. Well, that's just childish. Okay, right? So we're interested in changing our for reassessing as the market uh, does something else, and then asking ourselves, what is it actually telling me? And what I can see now as well, we're moving up in a non-progressive way to an area of volume. There's volume here, which caused an aggressive sell-off, which broke this brick wall. Okay, so we think of this as a brick wall here. There was a sharp move down, sharp move up, where there may be liquidity, but we completely smashed through that as a result of this exchange of liquidity here, caused by the fact that there was volume here. Okay, so we may be tapping into that. If there's volume there, we may see a tap above and a tap back down, and we may be able to, this is just touching at what we call an M style pattern. So when we get something like this, okay, sometimes what happens, this is what we call an M style pattern, or W, whatever you want to call it. Sometimes what happens is when we get a correction which is this wide relative to the impulse down which has preceded it, it becomes more neutral, meaning that instead of the natural impulse correction continuation to push lower, which is what we typically see. Too much volume builds up, price then breaks above to the next inflection point, which confuses people because they think it's going to the moon, and then it just sells off aggressively. Do excuse the drawing, but that's what we call an M style pattern, and that is one of our favorite patterns within the Falcon strategy. Okay, let me just get this paintbrush off. So with all of that in mind, what I'll be looking for today is the following. I'll be looking for, you can see we're kind of selling off now, but we're kind of moving down correctively. That doesn't surprise me, because when we near miss an area such as this, an area of value, and we start to sell off aggressively, that tells me that the bigger players are not on board yet. Okay, so what this could be is a little bit of consolidation before the break above here. Okay, and if it is, what I'll be looking for is price to tap into this area of value, followed by the push down and the flag, and then I would look to get short on the break of the flag or within it. Okay, and I would filter this on the 15-minute chart. If the flag is structured, as I've said here, I would look for the risk entry within the flag. Okay, and if it's not, if it's just consolidation, then I would look for a reduced risk entry on the break of the flag, and then I would be able to manage this down to this low as a first inflection point for something in the region of 5%. And of course, if we got all the way to the bottom, there is potentially 9% on the table. And this is actually where, particularly on a Friday and particularly on a pair like pound Kiwi, which I'm not too keen to hold on a Friday through the weekend, I would use a mechanical management based system, which is a new thing to the Falcon strategy. And I would look to take, I would trail my stops, but I would also set a take profit at the 90% rule, because as we know, this is where we can see near misses, and then we come all the way back up to test something else, or this is where we often hit the 90% rule, pull back sharply to say the 50% mark, form some kind of consolidation, and then push lower. And I don't want to leave that much profit potential sat on the table. So that's where I would use this mechanical based management system. So that is pound Kiwi. I'm going to move on because I have to get through the last three pairs. So dollar CAD. So dollar CAD. Yeah, okay, but I was just checking something there. Right, so dollar CAD on the higher time frames. You can see, yes, we have near miss to the area. This area, we know that near misses can be filled. However, we've broken above an area of significance there. We broke above this area of significance and then pushed down aggressively. And now we're trading below this low, suggesting that we may be able to capitalize on a move down to here, because this near miss failed to tap into this low last time around. And often you can see we're in a run of momentum. So just seeing this as an impulse correction continuation to take out this near miss and this low, which this near missed too. Okay. And then potentially we would have a move to the upside to take out this high, which this high near miss too. Okay. So just, you might be thinking, yeah, but it's pushing up aggressively. As with, this is what we call, this looks like more of a V shape rather than an M style pattern. But you can see there's an area of consolidation there, which is sat just below here. So if we tap into this area of value, we would also be retesting the back end of this if we rejected from it. Okay, so which could open the floodgates for a move to the downside. Okay, you can see how have we moved up once again. You might be thinking, well, this is a double bottom or a treble bottom. Okay, well, what have we reacted from? We've not reacted from anything of significance on the left-hand side. Okay, so looking left is often your best friend. Okay, we've got this kind of more of a V shape, I would suggest there. But you can see what happened. Remember in yesterday's video, I said I wasn't convinced by this move down because we'd wicked to the area of value and not through it. Okay, so if you just look at this on the 4-hour chart, we'd wicked to the area of value. There was a sharp move up followed by a sharp move down, suggesting that there's a lot of liquidity here. Okay, and then we wicked to it, not through it, suggesting that we may come back up to break the high, particularly when we can see this on the 4-hour chart and when we can see the consolidation to some extent on the daily chart. Typically speaking, we break above more so on the higher time frames, but this is we've got an area of consolidation here. We may tap into some of that as well. Okay, so what are we looking for today, especially given how the DXY, if we just flip to look at the DXY, this is the dollar index. Okay, we tapped into this area of value, but price did not find enough liquidity there to move it to the downside, and it's pushing up. Where is it pushing up to? It may be pushing up to this sharp move up, followed by the sharp move down, which retested the back of this tiny little bit of structure there. That may be what's happening. Okay, so if that happens, then dollar CAD will likely push up and break this area of value, because you can see it looks very similar. Okay, and we're trying to factor in the dollar sentiment, the dollar weakness, and the dollar strength as well. So once again, what are we looking for? Whoops, I don't know what that is. Trading view, as I literally had all of this on the chart just before I made sure everything was in place before I went live, and it's all been moved again for some reason. Right, there we go. So I'll be looking for price to tap into this high, push down and flag, and then I'll be looking to get short once again on the break of the flag or within it, and I'll be able to manage this down to this low as a first inflection point for 3%. Because we have moved up with a little bit of momentum here, I would be making sure to get my risk off the table, as we get down to this area, just in case this is some kind of bull flag to push higher, which gives us a 1, 2, 3. We can't rule these things out. Okay, and that's simply because we've come from a bit of momentum here, impulse, correction, potential continuation. If I was to get short here, I would make sure I manage it. I would have my risk off the table down to that low for that reason. But overall, you can see this is a bit of a we have moved up with a bit of momentum, but we've kind of scooped back down. It's not the most progressive move, okay, but we can't rule that thing out. That's partly why this is slightly lower down on the list as well. But we shall see. We shall let the market show its hand. As I said in yesterday's video, I'm not going to try and guess. I'm going to let the market show me what it wants to do. So that's what I'll be looking for today from this pair. So Aussie dollar, okay, if dollar CAD is going short and the DXY looks like it's going short, then there's a good chance that Aussie dollar is going long, okay? Aussie dollar, Australian dollar strength against the US dollar weakness, okay? So with that in mind, what do I see here? What's the narrative? What makes me think that? Okay, we have this. This is partly lower down on the list because we didn't tap the major area of value. We tapped this low here, which is not a significant or a standout, okay? We kind of near missed to here. And we have not moved up. This is not the greatest move up. Okay, sharp move down. However, then we start to go into a bit more of a reliable sequence. So once after this sharp move down here, we have an impulse correction continuation followed by an impulse correction potential continuation. Okay, and if we just measure these ones, that was a pullback of around just shy of 50%. So that's a healthy pullback. If we just measure the next impulse, we'll take it from here. That is just over 50%, which is a healthy pullback for that potential move to the upside. And one of the reasons that makes me think that is because we have a near miss here to these highs. We near miss to it. Okay, you might be thinking, well, there's a lot of momentum here to the downside, but yeah, once again, if the DXY starts to sell off, then Aussie dollar will naturally go long. So the next thing that we do is, again, if we just look at this, you can see the area of value there. We broke below this low. Price did not find it. Previously, I had my area of value here, but I said to you, price was moving up very correctively, suggesting that it did not find enough liquidity here to move it to the upside, which is why I was waiting for that consolidation to confirm the idea to the upside, just in case price did this and tapped into the next low, which is exactly what it did. So I said it, as I've said, it's not about being right. It's about analyzing what is the market telling me and then adjusting your sales, okay? So we have a sharp move down here, followed by a sharp move up, which caused price to break out of this. So we have this structure here, price comes down, and this low here last time around caused it to break out of all of this volume, suggesting that there may be volume here. Hence, note I said maybe. We don't know. We let the market show its hand, okay? You can see that how have we moved down? If we just measure, these pullbacks have been very sharp. We pull back here more than 50% of the move. We move down here, and we pull back about 70% of the move, more or less. Suggest this is not a typical sequence for a move to the downside if we're moving down longer term. So this suggests as well a move to the upside. Okay, so what I'll be looking for with all of that in mind, you can see that we're getting some momentum coming here, but once again, we've near missed the area. So what this could be is we could be seeing, we may near miss to the area, get something like this. Price comes back down. This becomes a 1, 2, 3, like so. This becomes the middle section here. And then we move to the upside, okay, which is a reversal structure. If that was to happen, if you count the candles at the bottom of the screen, that will not be ready by the end of the day. But we don't know if that's going to happen. Once again, we don't just assume what's going to happen. All my stuff has moved again. Let's move that back. So what could happen is the following. So if I just unhide the forecast, we could just tap into that area. I'm starting to think this is looking more like a reversal structure because we're getting a bit of volume. We don't normally see volume building below an area of value if we're about to go from it. Okay, so that is giving me a clue that this may be a middle section to push up, to push back down, to give us something like that. But regardless, at this moment in time, I'll assess the situation as price action evolves. But what I'll be looking for is price to tap into this area, which it hasn't yet tapped into, a push up and a flag, and then I would look to get long, and I'll be able to manage this to this first inflection point here, where there's a sharp move up and a sharp move down for something in the region of 3.5 to 4%. And of course, if we kept going and took out this near miss and the high, which we near missed too, then obviously there's a lot of profit potential to the upside. So that is Aussie dollar, and that is the thought process surrounding that one. I have an alert set there. If we do not tap into that alert, partly why this is lower down on the list, just to touch on it as well, is that we have this area of consolidation here, which we could also tap into as well. So that is Aussie dollar. Let's move on to the last of my pairs, which is dollar yen. Okay, so dollar yen on the higher time frames. Dollar yen. Okay, we can see that we've tapped into this all-time high here on dollar yen, and we've moved down very aggressively, suggesting that we may be able to capitalize on a move to the downside. You can see that this does look a little bit like a reversal structure, which it could be, which is partly why this is lower on the list. This could be some kind of reversal structure, and price consolidates to push higher. And the reason being is because all-time highs in particular, I've talked about how highs on the higher time frames usually get broken above if we're going to move to the downside, especially when they're all-time highs. This is a media-based phenomenon. People think it's just going to keep going. It reaches the broker platforms, dollar yen at an all-time high, and people just start piling in because they think it's just going to keep going. So although we have tapped into that area of value, we didn't break above it, which is what I would anticipate seeing in particular on an all-time high. Okay, so that I'm mindful of that. However, we can't deny also that we have a near miss here to this low, and that we have a daily high here where we had a sharp move up followed by a sharp move down, an area which is visible even on the daily chart. So if we tapped into this area and rejected, there's a very, very strong chance, if we've had this kind of reversal structure and price hasn't committed, there's a very strong chance that price is moving to the downside to either give us a double bottom to then take out this all-time high, or to just keep going and take out this low, at this low, which this low near missed too. Okay. Now we have to also be mindful of the sequence. Okay, so if this is a move to the downside, this is not a great sequence. This is partly why this is lower on the list. Look at these sharp moves up. Okay, we've had these sharp moves up, which have retraced a significant proportion of the previous impulse down. Okay, so this is probably the least reliable sequence of the four pairs that I haven't watched today. But as I said, if we tap into this area and we push down aggressively, that is the banks and the bigger players showing their hand, most likely. We never know for certain. But with that in mind, if I was going to look to get long for price to take out those all-time highs, I would be looking for something more of a significant consolidation above this high before I look to get long. But where today's forecast is concerned, what I'll be looking for, and I'll just put my stuff back where I had it. I'll be looking for price to tap into this area. Technically, we've already done that now, so I'm just going to be monitoring what price does. But I wouldn't be surprised, given that this is a daily double top, if we break above, break back in, But if we do break above and break back in, or we push down aggressively and get a flag, then I'll be looking to get short on the break of the flag or within it, and then I'll be able to manage it down to this first inflection point for something in the region of 6%. That is my forecast today, folks. Have a great day, have a great weekend, and I will speak to you again soon.